ULTY just dropped to around $4, and last night YOLMAX quietly filed a 1 for 10 reverse split. My cost basis is sitting at $5.56, and I'm down over $3,700 on price. I'm still holding 2,600 plus shares on margin, and in this video, I'm going to show you every number, my losses, my dividends, my margin risk, and break down exactly what this reverse split really means for us ULTY degenerates and for the haters.
Here we go.
And a quick reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY. Welcome back, dividend stackers. If you're new here, this channel documents my journey building weekly income using YOLMAX's ULTY ETF with margin, drip, and real life decisions along the way. And real quick, if you're getting value or just simply plain entertained from this journey, hit that subscribe button so you don't miss these weekly updates. Now let's jump into the numbers. Okay, so let's talk about what everyone's freaking out about. Late last night, this post on Reddit caused all the talk. The 1 for 10 reverse split is officially here for ULTY, and it kind of seems like YOLMAX tried to sneak it in. Why do I say that? Because they reiterated the fact they wouldn't, yet here it is. So where do we go from here? So first, here are the numbers. No hopium. ULTY is trading at around $4.16 as I'm recording this. I own about 2,643 shares with an average cost of $5.56. That gives me a market value of about $10,995. My unrealized loss on price alone is around $3,700, which is roughly around 25%, a negative 25%. Now, I've collected about $1,816 in net dividends since I started this experiment. When you factor those into the equation, my true gain, including dividends, is still a negative about $1,886 or a negative 14.6%. So no, ULTY has not been a magic you can't lose income machine. I'm currently down in real numbers, in real dollars, and I'm showing you that on purpose. Now let's talk margin because that's where people really get nervous. Right now, I'm using about $1,919 in margin. Robin has my maintenance requirement at 25%, and my margin buffer is sitting at about 70.6%. And that's all because I added an extra $2,000 cash this week to push that buffer back up before I let the dividends drip again. My daily interest cost sits at $5.25, which is about 11 cents a day on this level of margin. So compared to where I was a week ago, I'm actually less leveraged and a lot more comfortable writing out this volatility. Now the big headline, YOLMAX just filed for a 1 for 10 reverse split on ULTY. This came out November 14 in an SEC supplement. Here's what it actually says. After the close of November 28, 2025, ULTY would do a 1 for 10 reverse split. On December 1st, it will start trading split adjusted. Every 10 shares you own becomes 1 share. Your share price and NAV go up about 10x, but your total dollar value stays the same. They even give an example, 1,000 shares at $10 becomes 100 shares at $100. Still a $10,000 position. So in my case, at roughly 2,643 shares, those now become about 264 shares. After the split. If ULTY is about $4 something going in, you're talking about a post-split price somewhere in the low $40 range if nothing else changes. One important detail, fractional shares don't trade. If you end up with, let's say, 264.3 shares, your broker will likely cash out that 0.03 and send you the dollar amount instead. That small redemption can be a taxable event. You might see a tiny capital gain or loss there, but the split itself is not expected to be taxable for shareholders. So mechanically, this is just moving the decimal point. It doesn't magically create or destroy value. What the reverse split doesn't mean. So why do this at all? Typically, reverse splits are done for optics and mechanics. It moves the price out of the penny stock zone. It can clean up the options chain, and it can make the ETF look a little less scary to institutions and new buyers. So in this case, YOLMAX is doing a reverse split across 12 different ETFs, not just ULTY, including some short products and YBIT. So this looks like a broader house cleaning move. Now we singled out ULTY because it's over. But here's what the reverse split does not fix. It does not stop the NAV erosion if the strategy keeps paying out more income than it's actually earning. It does not remove the risk of big drawdowns on the underlying holdings, and it does not guarantee that the current weekly dividend sticks around or that the distribution stays at a 70%. It is a cosmetic and mechanical change. The underlying strategy and the risk are the same. So a quick dividend mat angle after the split, if they keep a similar payout rate, you'll see the per share dividend jump by about 10x, but you'll own 1/10 the shares. So the dollar amount of your weekly check should be very similar unless they intentionally raise or cut the distribution. All right, now it's time for the macro minute where we zoom out and see what really moved the markets this week. We kicked off the week strong with the shutdown relief rally. The Senate pushed a funding bill forward and the S&P popped about 1.5% while the Nasdaq ripped over 2%. And by midweek, it's official. Trump signs the bill and ends the record 43-day government shutdown, finally getting federal workers paid again, leaving a massive data blackout. But the Fed isn't throwing a party. Two Fed presidents warn against a December rate cut. Inflation sticky and the missing economic reports make it too risky to ease. Then we had the markets get AI whiplash on Thursday, and it turned into one of the worst days since April. S&P down almost 1.7%, Nasdaq off more than 2%, and AI darlings like Nvidia and Palantir slide hard. Overseas, SoftBank nupped its entire Nvidia stake, sending shockwaves through global tech and putting a reality check on the AI mania. Rates creep up again, the 10-year back over 4%, and traders cut their expectation for any more Fed easing this year as markets are basically bracing for a wait-and-see Fed. Now the safe haven shuffle. Gold pushes back towards the 4,000 zone as oil held its high 70s and the US dollar index is firming up as global volatility rises. And crypto was a mood ring again. Bitcoin fell below 95,000 and is acting more like a high beta risk barometer than any kind of safe haven. Bottom line, shutdown's over, but the fog isn't. Missing data, AI volatility, sticky inflation, and a cautious Fed. For income and margin players, keep the buffer fat, respect volatility, and let cash flow do the talking. Drop a comment. Are you stacking income, holding gold, or leaning into crypto next week? Let's see where you're at. All right, so now let's talk about my controversial part. I said I wasn't buying no more ULTY for a bit, and then I let the dividends drip anyway. Here's why. Before this week, my margin was getting uncomfortable. I didn't want to drip and sit on a thin margin runway during a volatility spike. So I pushed my margin back up over 70%. And at that point, I felt okay letting the $163 or so in this week's dividend reinvest and continuing the experiment. So here you can see that I recorded that on 11/13. And on the transaction page, on 11/14, I bought 39 more shares using drip at $4.20. For a total of $163.80. And of course, like I stated, that money comes out of the drip that was paid out in the dividend on 11/13. My plan as of today looks like this. Hold through the reverse split and see how the market reacts once YOLTY is trading at $40 range. Keep the margin usage modest. I don't want to be anywhere near a margin call if we get another leg down. Keep tracking two numbers publicly, unrealized P&L and true gain, including dividends, so we can see whether this ever actually becomes profitable. This is not me saying you should buy, hold, or sell. This entire channel is me running a high-risk income experiment on camera so you can decide for yourself if this kind of strategy fits your risk tolerance. To everyone still holding, you're going to see a lot of scary thumbnails and hot take tweets about reverse splits. Remember, moving the decimal doesn't change the underlying math. What matters is, are you okay with this strategy risk? And are you tracking your total returns after dividends and taxes? Lastly, do you have a plan if distributions get cut again and price keeps bleeding? And to the YOLTY haters, you're not wrong to point out the NAV erosion and the danger chasing yield. Those are real risks, but bearing those risks is exactly why I'm doing this publicly, with screenshots, spreadsheets, and full transparency. If I blow up, you'll see it. If this somehow works, you'll see that too. Either way, my goal is that you walk away better informed than when you click.
If you found this helpful, smash the like button, drop a comment,
Tell me if you're holding through the split, selling before, or waiting to buy the post split.
and subscribe if you want to follow this journey all the way through.
We're sitting at just over 3,800 watch hours and 4,000 unlocks monetization. I'm hoping this video is the one that pushes us over the line. So I truly appreciate all those likes, the comments.
For the algorithm, and for you watching through the end.
It genuinely helps. And don't forget, none of this is financial advice. This is just what I am doing with my money inside of ULTY. See you in next week's video. ULTY YOLO out.